So today's tip of the day is keep building up positions as it goes into your favor. So to explain this to you, what I mean by this is, so say if you have a position that you've just taken into the market, and the market you've taken a position at, say, at the stock price is at 50. Now, if the stock price goes to 75, you will then scale up and take another position to add on to your position. And gradually, as the stock progresses up to, say, 150, 200, you keep adding your positions at regular intervals. And this is called scaling up. So you keep scaling up your positions as the market goes higher and higher in your position until you build a full position. Now, keep in mind, you would never allocate your entire capital. Say if the market's gone or the stock's gone from, say, 50 all the way to 500, you will never ever invest all your capital into the market, even though you're scaling up that position. Now, the maximum that professionals recommend is 10%. So you could keep around 10%. And even the most you would keep is around like 20-25%, but never ever go more than that. And the reason for that is at any given point of time, a news may come up overnight or at any time when you're not around the market, and it may just like crash down. And in doing so, or what would that cause you to be into a big loss because you've actually invested 30% of your capital. So never have this hopes that you can just build up on this one position and that position is going to take you up for the rest of your life. So by building a position but also diversifying your positions, that's going to help you become more successful in a long-term sense. So keep that in mind, and hope this was helpful, and stay tuned for another video.